Hey traders, checking in on the stock market today. So not a whole lot going on in the broader market the past couple of days. It's almost like we're stalling out and trading sideways to a large degree. We'll see if that means that bulls have run out of short-term momentum and if we're going to roll over a bit into daily consolidation. Let's see what the charts are saying.
Introducing the Chart Guy's Swing Report, a weekly digital publication that uses technical analysis to identify long-term market opportunities. Understand the market from a swing trade perspective. Follow institutional money as it rotates from sector to sector, and make the most of the Swing Report's weekly trade opportunities, with key entry and exit levels provided. Performance is tracked and updated weekly. For more information, visit us at chartguys.com. Now, let's check out some charts.
So we'll start it off with SPY here, and we've got the all-time high of 381.49. We came very close yesterday, couldn't break it, came even closer today and couldn't break it, closing near the low of the day. That alone stands out. We know the bears don't really get follow through in extended hours. That is certainly rare, but we also don't really close near the low of the day very often. Last time that has happened was back pretty much the end of December. So this is the first time in the first 2 weeks of this year that we have closed near the low of the day. If the bears are going to prove anything to us, it would be this would be a failed daily bull flag if we reject from the all-time high, which we've done, and now we have to drop down and break 376.36 to confirm a little daily downtrend. If that level were to break, we would zoom out, and weekly consolidation, we would then be looking for a higher low to form. So line in the sand short term, 376.36 is in play. Really, through scanning all these sectors, it's just the tech sector that is seeing this weakness. We know earnings are tomorrow, starting with the financial sector, and then we're going to have financial sector and tech sector for the next couple of weeks. That's certainly going to have a significant impact in the short term. IWM is staying in complete control of the bulls, all-time high, no red flags whatsoever here, and plenty of space for a daily higher low next time we consolidate. So we certainly know the weakness isn't in the small caps. We've got QQQ with the lower high here, and if we drop down and break 311.20, we would confirm a daily downtrend. So 311.20 is the line in the sand level that we're going to be watching very closely over the next day or two. Healthcare sector, still holding on just fine. This could still be a daily bull flag. If we break 116.13 support, the probability of a bull flag will go down significantly. And then again, tons of space to be scouting a higher low from where we came from. It just would be a less bullish scenario than obviously if a bull flag saw a new all-time high from here. So essentially what the bears want to see is SPY, QQQ, and XLV all break their short-term daily little level. And for XLF, we don't have one of those nearby. It's down at 30.49. So bears would obviously love to break that level as well, but we can see it's not nearly as weak as QQQ and SPY. So essentially, just through the names that we've looked at, we've got SPY and QQQ, pretty much the same daily chart over here. XLV is a little bit weaker today, so we would put it in that grouping. And over here, we've got the small caps IWM. We've got XLF holding on just fine. Biotech bulls were just fine. This is the cup and handle pattern on the daily trying to play out, where we have our left side of resistance, failure to break it on the right side. There's your bull flag. Didn't prove anything yesterday, but here's that volume spike we needed to see. Strong close, green Marubozu candle up at the high. We already broke both levels. So this is a confirmed cup and handle all-time high breakout, and we need follow through tomorrow for it to be convincing, but it's a great start, and we'll just be looking up at psychological levels. If the bulls can make their way up beyond 154 and get up to 155 tomorrow, it will be a textbook cup and handle example. Semiconductors also still remaining strong. Higher high today, and again, we haven't set a clear daily higher low since 211.92. So there is tons of space. And if we look at some of the individual names, NVDA is not the reason for this strength. AMD pulling back significantly from its double top at the all-time high as well. Definitely have to be paying attention to that. Not really a double top. We did break it by 1%, but certainly no follow through. And this is a rising wedge. If I were to draw this rising wedge, it would be just like that. So you could say we are breaking bearish, but the daily supports, the higher lows are still holding. If the bears really want to prove it here, 89.46, 89.43, 89.03 are our last higher lows taking out all of those levels would be a very notable momentum shift, but it's notable that SMH is still fine, even though some of the larger semiconductors are starting to see some of that weakness. TAN in the solar sector, just sideways, nothing going on. Still a key short-term level of 112.30, but bulls have not shifted momentum enough for us to say, yes, that is our clear daily high or low, and we're making our way back up towards resistance. So still looking for that. Daily EMA 12 still catching up, coming into play, and we should see a break, either a bear break of 112.30 or a bull break of 117.72, probably tomorrow. If not tomorrow, then certainly Tuesday, with Monday not trading. And you'll note that, I'm not sitting here predicting which direction we're going to break. The trend obviously favors the bulls, but it could very easily break either of those levels in either direction. So I am more a reactionary trader than I am a predictionary. It's not a word, but predictionary should be. MS, no, yeah, semi, no, who are we looking at? MJ. Potential climax, euphoria move, blue sky breakout, bearish reversal doji. If the low of today breaks tomorrow, we'll finally be seeing some daily consolidation after going a solid 15% since the last daily consolidation. So again, just a little example of some euphoria perhaps coming to a short-term close and some healthy consolidation needed here. But just a little, I view this now in these broader market videos just as a bit of risk on sectors. And certainly the risk is still on with the strength in the MJ sector. The VIX is still tightening up. We're either going to see a break of 2140 or a bull break of 2520. And again, we know a break is imminent. Sometime within the next 3 days, most likely, we will see a break. We'll see what kind of follow through we get, but it is shaping up here. If we were to roll over and see SPY and QQQ lose those daily supports, we would see the VIX here likely break 2520. If we're looking at UVXY just as a comparison, we can see it's already dropping to lower lows because of the time decay factor. So this would be more of a falling wedge type setup, but all depends on how the equilibrium on the VIX breaks. The dollar is trying to confirm the daily uptrend or daily trend change. So little higher low at 89.92, but unable to break 90.73 and confirm this trend change. And again, if we confirm it, it's pretty much an inverse look at what SPY and QQQ are doing right now. And if this bull break takes place, then SPY and QQQ would likely lose their daily support levels. So certainly keeping a close eye on the dollar the next couple days to see whether or not the bulls are able to confirm this trend change. Gold and silver have a pretty distinct different look to each other. This is gold trying to negate a bear flag, daily bear flag rolling over, heading back down to support. If we hold that low and break the high of the bounce, 1864, we will say the bear flag is negated and bulls have regained short-term control. From there, we would zoom out and scout a weekly lower high, anything under 1959. But first things first, the burden of proof is on the bulls short-term here, and they must break 1864 to fend off that bear flag. Silver's different. Silver broke the high of the bounce today, so distinctly different. And that decreases the odds that it is a bear flag as well. And we're starting to reach the size of the bounce where we are still looking for a lower high compared to 27.93, but the size of the bounce is starting to become significant enough where we will then be watching for a daily higher low to form compared to 24.34, the low of that pullback. Miners look more like a bear flag on the daily still at this point. If we were to drop down and break the low of today tomorrow, it's just 35.29 right there, and that could very easily still be a bear flag at this point. Oil bulls keeping their control. We did lose the pattern of a higher low every day, but zero bear follow through. 53.93 is the current top of this move, and it's a potential daily bull flag, and certainly the strongest close, the highest close that we've seen on this entire breakout. Natural gas pulling back still trying for a high low on the daily compared to 2587, but we do need to be cautious for potential weekly consolidation. We know we have not changed the weekly trend yet, so we will need a weekly higher low and higher high to have confidence in a monthly trend change setup. So all about 2587 in the short term, even if it holds now, size of the pullback significant enough that it could be possible. 12-hour head and shoulders might be forming, it looks like. So if we hold 2587 and then bounce and fail to break the high, just have to be cautious of that setup that could potentially lead to weekly consolidation, where we would then look for a weekly higher low to form. So that is where we stand in the broader market as far as trades for me today. I was trading the MJ space with tons of volatility. I just put out a video specific to that sector, so not going to go into any of my individual trades. Pretty much just entering on consolidation and first 5-minute oversold conditions. Other than that, Bitcoin's getting back and active, getting back to being active, watching for the potential of a tightening daily range there. And other than that, swing trades still going well. ZM and XL, I exited half of both of those positions because my account was seeing a bit of euphoria. And whenever I'm feeling euphoric about the start of a year, especially the first 2 weeks, I lock it in. So still have some exposure there, but definitely lightened my exposure. And we'll take it from there. Have a good rest of your day. Do good things. Have a good long holiday weekend, and we will see you soon.